This is our Forex blog video for November 10th, 2011. And like most days, we really want to buy the strongest pairs versus the weakest and sell the weakest versus the strongest. Ideally, we want to see strength like in the yen, where the daily, weekly, and monthly trend all match. And you can see in the dollar, the weekly and monthly trend are a little bit stronger than the yen, but the yen was stronger from 11 till about 3. And then you want to just basically look for patterns. A lot of times you'll miss the first move of any trend because our software doesn't tell you what's going to happen in the next hour if the market's going down. We don't know, neither do you, and no one in the world does. There's not a single person, other than possibly a country that's about to buy trillions worth of its own currency or sell trillions, doesn't know which direction the news is, the price is going to go. So when you see a lot of strength, and it's in the direction of the longer term trend, as you can see right here, and then you get a counter trend move that has less strength or less weakness than the strength, then that strength's likely to continue, and more likely to continue if the longer time frame trend is up, like you see here in the yen. Examples of the opposite is here in the Australian. The daily, weekly trend is down, the monthly trend is up. The New Zealand's down on all time frames, and you have incredible weakness right here, followed by almost no strength. When the New Zealand is weak, incredibly weak, real time, and the daily, weekly, monthly is extremely weak, and you get a counter trend move that only lasts for 15 minutes because each one of these bars is for 5 minutes, and it has no intensity and 1/5 the intensity of the previous move, then the New Zealand's very likely to become weak again, and you don't know when. It could be 5 minutes or 20 minutes, and you don't know how long that trend will be. In this case, it was only for an hour. Then we had a little bit more intensity up move than we did before, but half of what the weakness was, so the downtrend's likely to resume, and as you can see here, it did. So, clearly the easiest and best patterns were the yen buying and the New Zealand selling. So we're looking to sell the New Zealand yen up until the yen goes weak around 330. So looking at this, you can see that this currency is obviously in a downtrend. It's underneath the hourly moving average. I do Fibonacci analysis work each night to let you know where major support resistance is. Notice this Fibonacci area was the high of the day in 3 instances, and this Fibonacci area was the low of the day. When currencies are weak, they can obviously go below the lower fibs, and when they're strong, they can shoot above the upper fibs. But these give you a good guideline and roadmap. So last night the market came down to this fib area, and it did find support for many hours. One thing to be aware of is we have a 3-hour counter trend signal right here, which typically is the end of a move. The market rarely goes down more than 1 or 2 more waves. So you can draw your fibs on this. And I'm sorry, I'm using a new trackball mouse, and I'm not used to it yet, and I'm probably going to take it back. But my accuracy at selecting these is less than ever. So this next fib target level is a phenomenal place to exit your trade, and because of this counter trend signal, possibly even do a counter trend trade down here, especially since the 1.618 fib level also matches up a much longer term multi-day, possibly a week and a half wave fib area, and we have a fib target down there, and a bunch of 30-minute counter trend signals as well. So nonetheless, starting the day off, we're looking to sell, and you can use what we call a trend line approach to get in. Once the market is trending down, you get a little counter trend move up, draw your trend line underneath those bars low, and when it gets broken, go short. You'd be short this somewhere. Whoops. Again, I'm using not only a brand new mouse, but a brand new technology, a mouse that I've never used before in my entire life. You'd be short somewhere around 60.51. And if it stalls at this major resistance area here or here, you want to get out. We also have our trailing stops. Usually when it's underneath the lower band, it stalls right here. You want to get out of the trade somewhere around 50. So you made about, sorry, let me see that again. 20. You made about 30 pips on that trade. Remember, 10 pips a day net, 50 pips a week is all you need to double your account every 2 months using small 2% risk per trade. So a 30 pip win is almost an entire week's worth of minimum profit that you would need consistently to double your account every 2 months. So a little bit after 330, remember, the yen became weak, and that's what caused us to go up. If you did do a counter trend trade down there, especially when you have the little double bottom here, most of the time it's going to find resistance at the hourly moving average, and this Fibonacci area is very, very strong. It was support last night for 5 hours. Traders probably bought there last night thinking it would be support, and when it broke down, traders that are still in their position when it comes back up to that level are likely to get out of their trades at break even. Let's go look at the next example today. Now the euro is showing quite a bit of strength today, but it's against its weekly and monthly trend. But anytime you see a 2-3 hour intense move up with a half an hour to an hour and a half move down with less weakness and strength, you can certainly look for that momentum to the upside to continue. Around 6:30 right here, what's weakest between the dollar and the yen? Most of us like to trade the bottom pairs versus the dollar and yen. Here you can see the dollar and the yen were both weak, and during the counter trend move, the yen had a little bit more intensity to the upside than the dollar. So coming up to 6 right here, I would personally look to buy the euro dollar, not the euro yen. So let's go back to look at this chart right here. And remember, coming up to 6 o'clock, this was a very strong currency on their way up. We got a pullback. It also happens to have the Fibonacci area right there. And on top of that, it also happens to be one of our Elliott two-wave pullback systems. We had a pullback right here, then it went sideways for about 15 minutes, and then it came down, and the 1.618 fib profit target is there, the hourly moving average is there, and the Fibonacci area is here. A very high probability place to get into the trade, and you can see it went up from about 35.50 all the way to 36.50, 100 pip move. Now, obviously, you're never going to catch all of that move. Most of us might have, in the beginning, got out of this trade with a small win, and then when it took off, maybe when it got above the upper containment band, you get out somewhere around here, or let's just say 20. So your average exit might have been around 90. But it's a 25 to 40 pip profit for sure out of those 100 pips you would have made. That's the main way we use our currency meter. Find currencies that have momentum moves. Now, the Swiss was extremely strong today. However, the weekly and monthly trend are down, so you don't know if, very rarely do you see a currency that remains strong all day long for the most part until really about 9:30 it had some intense weakness for the last few hours. It's always more dangerous buying a currency if it's in the opposite direction of the weekly monthly trend. When all the forces are going the same way, it's a much easier, high probability trade. And there's not a lot of perfect patterns today, although, if you see a lot of strength in the Swiss, you certainly could trade it against the very weak Australian or the New Zealand earlier today as well, instead of the dollar or the yen. Let's bring up a New Zealand Swiss and Australian Swiss chart just to show you, that when you have one currency that's ridiculously strong and another one is super weak, what you get. Well, this is a new feature we put in the software. I haven't released a new update for a while. Once I finish the website, I'm going to, but it allows you, when you're resizing your charts, to see exactly how many pixels you have. And I hadn't put it in there for me for the website because I have to have pictures of certain sizes. But you can, much easier if you wanted the 640 pixels wide to fit on your screen for whatever reason. There we go. You can see why I hate this trackball. And you grab the side, it only adjusts the top and bottom. So if I wanted this, 400, there we go. Without having to constantly go back into the window here and look at the window size right here. So that's a nice little tweak for setting up your workspace. Once you have workspaces set up, you don't typically spend a whole lot of time moving charts around. I rarely do until I come up with new features or tools. Now look at this New Zealand Swiss. We have a weak New Zealand, and you don't really know it's extremely likely to continue until about 1:30 right here. You had intense weakness, the daily, weekly, monthly trends down, almost no strength. Coming up to 1:30, it's very likely to continue down. The Swiss was very strong, and this is just, a perfect trade. Strong Swiss, well, I wouldn't call it a perfect trade because the Swiss longer-term trend is down. So you don't know how many pips you're going to make, but most of the time it's going to work its way down to this fib target. So you'd be short somewhere around here at 70.88, and let's just say you get out a few pips around here at 67. So you made a little over 20 pips. That's a decent profit for risking 10 pips. You risk 10 pips to make 20. It's that simple. All right, so that's it for this Forex blog. I'm going to do a regular class now.